There's $41 trillion needed for climate technologies and interventions over the course of the next decade, 37 trillion for social challenges and to produce the social outcomes that we need with education, healthcare, financial opportunity, education opportunity, work opportunity. Those are enormous sums of money. And there is not enough philanthropic capital or government aid in the world to be able to meet that need. So where business can play a role, it's important to bring that capital to bear. And in order to get the capital markets to work, to fund businesses that are generating social and environmental outcomes responsibly, you need to prove that you can generate a risk-adjusted return to attract that capital.
The concept is to unlock both sides of the market. The investors who are confident that they can generate great returns while doing good, and then of course convincing the leaders, the founders, the entrepreneurs, the management teams and boards of these mission and purpose-driven businesses that they can partner with somebody who cares as much about their mission and purpose as they do. As we traffic at the front lines of where all the innovation is taking place to address big social issues around education or financial inclusion or major environmental challenges, one of the things that you see is that the solutions are out there. The technology is evolving and developing very, very rapidly. What is holding us back is commercializing those solutions, scaling the organization, scaling the manufacturing capacity, scaling the business solutions quickly enough to be able to have the kind of impact that we need. And we're trying to do our part to channel the power of commercial enterprise to solve those.
We created a new discipline and a new framework and a new high bar for how you underwrite for impact in the industry. There wasn't a standard that existed before us, and we have today, I think, one of the leading methodologies.
When we started Rise, the impact investing industry was very nascent. You know, a large impact fund might have been $100 million in total capital. And what we thought, and really the fundamental premise of creating Rise at the beginning, is that that didn't make any sense. That there were actually companies out there who were scaling, or growth equity scale, meaning that they could use $100 million of capital just themselves, that were deeply impactful. They were collinear, meaning that what they did to make money actually created net positive social and environmental impact. And we thought that was a massively underserved market. And so we built the Rise platform to serve those companies, those highly collinear companies. And I think what we've learned over time is that by virtue of doing that, focusing on sectors that are addressing some of the world's most challenging problems, building partnerships with these mission and purpose-driven entrepreneurs that have come up with very powerful business models that are addressing some of the most critical contributors to those big global challenges, that's actually a great investing strategy.
The next wave that we ushered in, the age of what I'd like to call institutionalization, is pretty notable. I would say a third wave of impact investing came about pretty quickly after we started the Rise Fund, and this really started to take shape in 2020 when the wave of climate investing began. And what we are living through today is really a wave of growth that's being led by what's happening in the climate space. We're seeing growth equity strategies like ours come to market. We are seeing an increase in climate infrastructure funds. We are doing a lot of work ourselves within TPG to expand what we're doing in climate. But we're also looking forward to think about what the next wave will be and the next era of growth will be for impact investing. Because although climate is super important, the social needs remain, and the capital requirements for what we have to invest in for social return is equivalent over the course of the next decade or two to what we need to invest for climate return. One of the biggest opportunities for the Rise Fund is investing behind financial inclusion. So across the continent of Africa, across South Asia, Southeast Asia, Latin America, there are still about 1.5 billion people who are underserved by financial services institutions. They're just not met by the current financial system. And bringing them into the financial system is very key to making them economically active and spurring economic growth, as well as promoting financial wellness through savings, investing, and effectively reducing the cost of transactions. So fintech and financial services is a huge market and of deep, deep interest to us in the emerging markets. Technology has enabled digital reach. So accessing millions of low-income customers has been enabled by smartphones, as an example. Giving someone a capability to complete their financial transactions, to set up a bank account without having to walk into a bank branch that may not exist in their community or in their village. Doing a lot of these things digitally just enables access.
Another place where we tend to see new investment themes emerge is when we're following technology trends. So, for instance, the application of artificial intelligence in the world of education, that led us to the process of adaptive and personalized real-time learning solutions. And as we look at the power of applying AI to the learning process, that tends to open up, new themes, new ways to look at opportunities in each of these sectors. In the education space, we're focused on several really important trends that are impacting the lives, particularly of kids in the K-12 space. Number one is just finding a way to use the power of technology to apply more adaptive and personalized learning, both in the classroom and at home. Another major theme in education is the mental health crisis in K-12 today. And we've been looking at companies that are trying to address that, both from a preventative standpoint, in other words, building in social and emotional learning solutions into their curriculum, into the software that they provide to support particularly students who are running into learning problems. And then also through intervention by having solutions that bring technology-enabled therapy to kids who have special learning needs or have run into acute mental health or behavioral health problems that are preventing them from performing in the classroom.
The RISE Fund is super interesting in that we are the most global fund within TPG, and that gives us a very unique perspective on globalization. What's interesting about our investing practice is that we see how trends in education, trends in healthcare, trends in financial services transcend borders of countries. And we can take business models that we have learned about, understood, and perfected in the United States, for example, and start exporting them to other markets. By the same token, we take some innovations in the payments landscape or in the provision of financial services to low-income individuals that we have found works in Africa, where we've sort of leapfrogged traditional bricks and mortars provision of financial services and gone straight to digital, and bring that into the US in order to lower costs and increase reach. So globalization, even though it's a very challenging term in the current world where you see a lot more fragmentation, there are certain trends within the sectors that we focus on at the RISE Fund where it's actually an asset and where companies are increasingly trying to bring their products and services across borders because they make sense for different markets and different regulatory regimes, and we're powered to do that work. One of the fundamental contributions that the RISE Fund made when we came into being for the impact ecosystem generally was to raise the threshold of underwriting on the impact side. So when we started our work at RISE, there was not a standard that would allow us to identify whether a company that we chose to invest in, whether it was in the education space or the clean energy space, was actually moving the needle on solving the social or environmental problem that it was meant to solve.
We have a rigorous standard for what defines a truly impactful business. You'd be surprised that actually in many cases, in fact in most cases, even really mission and purpose-driven entrepreneurs have never seen a deep quantification of how their businesses really do impact the world. And when we go through the impact underwriting process, they get the benefit of seeing an outside-in view of just how their business is really changing the lives of the people they touch.
So the methodology that we developed within RISE, which we call the impact multiple of money, we've developed other variations of it, climate yield, and we continue to develop more variations, is really the framework that allowed us to lift up and make more rigorous this whole practice of underwriting for impact, and then being able to evaluate whether the companies were delivering the impact that we intended.
The impact entrepreneurs that we're seeing today are different in that they combine this deep sense of purpose, of being mission-driven, leading organizations who are passionate about making a difference in the world, and yet they're equally passionate about doing that through a for-profit commercial vehicle that is their companies. I think impact entrepreneurs today understand that the best way to achieve really world-changing impact is to create a commercial model that attracts private and ultimately public capital to help fund that vision and that mission over time. And I think a big part of what we try to do at the RISE Fund is find those entrepreneurs and help them through that journey to tap the private and public capital markets to fuel their purpose and mission.
This is the sorting function and the sorting role that we at the RISE Fund play in the market, which is to identify the social or environmental challenges that can be met by commercial capital, to find the entrepreneurs who are building companies that are fundable by commercial capital, and then to generate the financial returns that are appropriate in order to crowd that capital in. So we do something that's, I would say, harder than regular investing, because when you're doing regular investing, what you're looking is just for that technical skill set, the leadership qualities, the technical know-how to build a business. We have to find all of that in the entrepreneurs that we back, but we also have to find that deep-seated impact authenticity, because it's the resilience, the grit, the determination to solve a big problem, using business, that creates success for our entrepreneurs.